Japan Market Brief, the after-close summary built for the next trading morning. This is the Japan Market Wrap for April 30, 2026. Today's central question is this: when does policy risk become the trade itself? Japan's market gave us two examples in one session. The first was the currency market. Dollar yen dropped sharply to around 155.6 after Japanese officials delivered stronger warnings on possible intervention. The second was Makino milling machine, where MBK Partners abandoned its tender offer after accepting a Japanese government recommendation to stop the deal on national security grounds. Those two stories are different on the surface. One is macro, one is a single stock, but both point to the same issue. Investors are now being forced to price government action directly. Market moves: the Nikkei 225 fell 1% to 59,284.9. That pullback was not huge relative to the rally Japan has already had, but the reason mattered. A softer yen has been one of the supports for Japanese equities. When dollar yen suddenly falls, exporters lose part of that support, and investors become more cautious about buying the index near high levels. At the same time, the market was not dealing with FX alone. NHK reported that oil prices were higher. Japan's long-term rate moved above 2.5%, and companies were starting to show more visible cost pressure. ANA guided for a large drop in net profit this fiscal year because of higher fuel costs. JAL gave a more resilient message, saying fuel costs could be offset by fuel surcharges and strong inbound demand. That contrast is useful. The market's immediate move came from the yen. But underneath that, corporate margins are still being tested by energy, rates, and supply chain costs. Why today was different: recent sessions have often been about Middle East risk, oil prices, and whether the yen helps or hurts Japanese stocks. Today was different because the policy angle became more explicit. The intervention warning told investors that the authorities are not just observing the yen, they are trying to shape expectations. That changes how investors treat dollar yen. It is no longer only a macro variable, it becomes a policy boundary. The Makino story shows a similar boundary in equities. Advanced manufacturing companies can carry strategic value that goes beyond earnings. If a business makes technology that touches defense supply chains or sensitive industrial capability, a takeover premium may not be enough. Government review can become the decisive factor. Stock to watch: today's stock to watch is Makino milling machine, ticker 6135 in Tokyo. MBK Partners had planned a tender offer for the company, but the Japanese government recommended stopping the deal because of national security concerns. Makino makes high-performance machine tools, and authorities were concerned about the possible outflow of sensitive technology. On April 30, MBK accepted the recommendation and abandoned the tender offer. That removes one path for the company, but it does not end the story. Reports also say Makino has received a preliminary, non-binding acquisition proposal from domestic fund NSSK. That is what makes Makino interesting. The stock is no longer only about whether there is a takeover premium. It is about what kind of buyer is acceptable, what kind of technology the government considers strategic, and how investors should value optionality when foreign ownership review is part of the equation. For global investors, this is a reminder that Japan's corporate governance and a story is becoming more complex. More deals may happen, but not every deal will be judged only by shareholder value. In strategic sectors, national security can override financial logic. What to watch next? There are three things to watch after this session. First, dollar yen. If the pair stabilizes near 155 to 156, the market may treat the intervention warning as a reset. If yen weakness returns quickly, intervention fear may come back even stronger. Second, company guidance. Airlines, shipping firms, and energy users are beginning to show how oil and rates affect margins. That matters more than the index level alone. Third, Makino. Watch whether the NSSK proposal moves forward and whether investors start applying an economic security discount or premium to other advanced manufacturing names. Closing: that was Japan Market Brief for April 30, 2026. The market moved on FX, but the deeper story was policy risk. In currencies and in equities, government action moved